Hello guys, I hope you all are doing well, and in this today's video I'm gonna discuss a small account strategy that you can actually use to generate more than 200 between 200 to $300 every single week, or if you want you can do it every single day. So I'm gonna show you the stock or the ETF that you can use for this, and then we are gonna discuss the complete strategy in detail. So let's go to my Robinhood account and let's see how you can execute this strategy. So I'm gonna use QQQ for this, right? That's ETF that basically tracks the NASDAQ 100, and it consists of all the tech sectors. If you look at their holdings, right, the top 10 holdings are in technology. So if you see all the big names, right, the Apple, Microsoft, Amazon, so it's completely diversified across the big tech names. Okay, the why I'm choosing this ETF is because if you go to the options chain, right, you can actually see they literally have a expiration date every single day. Even you can do the options for today's as well, right? So every single day, today is September 8th, and as you can see, right, they have expiration for every single day. I would personally go with the weekly option because if you can go for daily or every 2 days or 3 days. It's just that it may be more work for you, so it's better to go for a weekly option so you don't have to adjust the position that much if the strategy does not go according to your plan, right? For this strategy, what we are gonna do is we are gonna select sell and put. Okay, now you're gonna select the expiration date, which would be, let's go with the 7 days, as we said, right? This would be a weekly, so this is gonna be a next Friday, right? So you're gonna say sell put and then the strike price, right? So for the strike price, this is if you just do sell put, right, that would be kind of considered cash secured put. So if you're gonna, let's say if you go 370, right, if you select this, what you have to do is for this position, as you see, right, it has a capital requirement of almost 37,000, because you need to have 37,000 in your account to actually play this strategy, right? But what we are going to discuss is to reduce your capital requirement, right? If you have a small account and want to earn this profit every single week, so that's where this particular strategy comes in. This requires a less capital, and your profit percentage, the return on investments, is also high. So what you have to do is first you have to select the strike price. So for a strike price selection, you should keep two things in mind. The first is the delta. The delta has to be around, I would say 30 is safer, right? So 30 delta, what it means is, let's say this one, right, 369, this one has a delta of around close to 30, right? So this is a good strike for this strategy. Why it is so? Because 30 delta would mean that you will have only 30% chance that this position would expire in the money, right? Because if it goes in the money, then you would be on the losing side of this trade, and we do not want that. We want this complete contract to expire worthless, right? So for that reason, we are going to go with the delta of close to 30. The other important factor that you should be looking at is the IV, right? So the implied volatility, I would say that it should be, if it is between, in this case, as we see, it is like 16.58, right? So which is okay, but I ideally, if it is around between 20 to 30, your premiums are gonna be high. And because it is ETF by nature, and it is diversified, that's why the implied volatility is generally low. But coming Monday, you might expect it to go slightly up. But other than that, in case of ETF, it's generally low, but this is fine for an ETF, right? For a stock, if you're doing the same strategy in a stock, then definitely go with something which is like between 20 to 30, because what that does is that's gonna give you more premium, right? So these are the two things that you need to select or choose when you're doing this strategy. So that's the first step, right? You do sell put, and this is gonna be your strike price. So that's what you're gonna select. By the way, guys, if you have liked the video so far, please do hit that like button and subscribe, and that motivates me and to make more such videos. Okay, going back to the topic. The next step is you're gonna buy a put below this, right? So I would say you go leave like a couple of points down, right? If you don't like, if you directly go right under this, your again premium would be less. So I would usually say, right, you go like 3 points down, right? So you did sell a put on 369. So in this case, you can go and do like 366, right? So we can do this one. So now you can see, right, your max profit right here, max profit is 67 for this. So this is the strategy, right? This is a put credit spread that you're gonna do. So your max profit just for a week, right? Now see, earlier the collateral requirement was 37,000, right? And now your collateral requirement is just 250. That's max loss is showing as 233 because it's 250 minus 67. So that's comes down to 233. So your collateral has come down from 37,000 to just $250, right? And you're gonna get almost third in the return. So your return on investment is really high, right? That you're gonna receive right away in your account, right? And your max loss will happen if the stock starts going down, or in this case ETF starts to go down below 368, right? However, it is not an unlimited loss. It's gonna stop right at 364 point something, right? So that's gonna be your max loss in this case. So your max loss is capped to just 233, right? So this is the profit and loss for this strategy, right? So this is a very good strategy if the market is kind of in neutral zone, as if right now it's like kind of a consolidation mode, right? So this is a very good strategy in this kind of market scenarios. And the major factor that it has is this for small accounts, right? You can grow the small accounts using this strategy very quickly. So if you say, if you do weekly, right? So weekly you're gonna collect almost $70 every week, right? So if you do it successfully for a month, you're gonna get close to $300, right, using this strategy. And if you can do this month over month, you can imagine like how quickly you can grow your account. And your max loss is always capped, so you are not putting that much amount in risk while doing this strategy. So that was about it, guys, and that's what I wanted to discuss. And it is a very good strategy, like I said, for small accounts. I'm planning to make a lot of videos around the small accounts because I get a lot of questions on like how one can grow the small accounts, right? So my plan is to put a lot of videos around small accounts. So please, if you like the video, please do subscribe, and I'm gonna put those contents very soon. Happy investing, guys, and I'll talk to you in my next video.